Good morning. This is Doug Campbell with Right Way Options and your morning market preparation video for February 5th, 2018. So my goodness, Friday. Wow, what a move, huh? And I know everyone is probably still kind of reeling from that move. Once we broke through this support level, it was kind of all over for the market. The sellers came in. Everyone was running for the exit before the opening of the day, or before the weekend. Now, one of the things that happens when that occurs is far too many people try to predict that extreme move means we're necessarily going to bounce. Clearly this morning, the market is proving that that is not the case. We are right now showing almost a 250 point gap down this morning, following through on this move. Notice we're coming very, very close to 25,000 here on the Dow. Now, does that mean 25,000 will hold? It does not. Sadly, it does not. We have to remember we had an unbelievable move up. And what we're looking at here is just really nothing more than a reversion to the mean. As bad as this is, so far, the Dow has only pulled back about 4%. No big deal, right? I mean, that's not even close to a correction. So this can continue. And don't try to predict when it stops. Wait for the good entry signals. We'll see them occur, and that gives us an opportunity to enter, but don't try to predict it. It can be a very painful lesson, one that I learned a long time ago, trying to think, well, you know, we have to return to this normal price action, and that's not the case. A lot of emotion is spilling out right now in the market, and that emotion is going to continue to stay high for a while. So even if they do start buying, remember we are in a market environment where we're getting all that emotion is continuing to spill out, and all of that emotion means even if we do rally up from here, the market could gap down tomorrow morning. We're going to be in a market of probably quite a few morning gaps. We're also going to be in a market that can produce intraday reversals, really quick swings. So my suggestion is to remember that not every day has to be traded to be successful as a trader. As a matter of fact, when markets are like this and you have no edge, it's better to just stand aside, just wait, relax, take a breath, wait for the market to return to some normalcy, because it will. We know that it always will. And wait for that to occur. And you're going to have more capital in your account when that occurs, because you're not going to get chopped up in this mess. And you're going to be better prepared to trade with a cool head rather than all the fear and panic that's rolling through the market right now. So be very, very careful about thinking that, oh, we're oversold, we have to buy it here. That's not true. There was a period in 2008, if everyone remembers, 2009, where the Dow had intraday moves. That means it traveled more than 500 points in one day, and it did that for about 30 days in a row. Okay? Where we traveled 500 points. That means big intraday reversals, big swings all day long, and that made it very, very challenging to trade. And if you were trading in that, you likely got chopped to pieces. So save your account. Just wait for the market to settle. Wait for it to show those good signals before you dive into that trade, okay? So be careful, everyone. Let's take a look at the SPY. SPY breaking down through its support, now trying to seek this level right here. If I were to bring this over, trying to seek this level here, but what you're going to see if I draw that across is it looks like it could be moving down toward the bottom side of that little teeny tiny support level. This is one of those dangerous things that occur when we run up without a pullback, because there's no floor under this. Keep in mind that we could come all the way back to this support pretty easily to test that as support. So kind of keep that in mind as we go forward. Let's take a look at the Qs. Now the Qs held up actually remarkably much better, I think, than the overall market. But on Friday, it cut loose. And here's that next support levels right down in here. Notice we're likely going to gap right into that level. And in that, please keep in mind, these lines are not nice thin lines. Most of the time they should be kind of a wider range, a big fat line. So somewhere in here is the next support level on the SPY. And notice that it's a very weak support level. The big support level's down here. So let's keep that in mind. We don't have to stop at that support. Now we could stop and we could consolidate. Always remember that. We could stop here and just simply consolidate before we move lower. So don't assume that we're going to necessarily bounce here. IWM really gave it up, breaking through kind of an important support level. Now seeking this next support level this morning down in here, and that actually could travel all the way down here to this level before we find significant support to hold IWM. But right now I'm marking out this just underneath this little price action here and just above here, and that's about where we're gapping to this morning. We'll have to wait and see if that's going to hold or not. So be really careful. Let's take a look at the VIX. Remember, I've been saying for a long time, my biggest concern on the VIX and when things would get bad or could get bad is when we first break through this upper trend line. This upper trend line has been building for a very long time. Here's a weekly chart. It's been building for 2 years. So I said if we actually break through there and hold as support, that's where the real trouble in the market will begin, and that's where the real trouble in the market did begin. So this is going to spike on up here today, likely, and we're going to reach some of those extreme levels. I would not be surprised to see us up here in the 22 area before the selling stops, and maybe even higher up here toward the 25, 26 area before that subsides a little bit and we come back into some reality and we pull back, or the market rallies back up, at least just a little bit, at least rests. Let's take a look at T2122. T2122, the 4-week new high, new low ratio. You can see that's reached that bullish reversal zone. So a rest or a bounce back up would not be out of the question here. We're extreme down here because we're gapping lower this morning. So we could see that bounce back. But just keep in mind, that does not necessarily have to happen. We can continue going lower. The more and more we kind of press against that, we're likely to see the big guys start buying up here to fend it off, because remember, they can't roll out that quickly as a retail trader can. It takes them 6 to 8 weeks minimum to roll out of a trade. So they're going to be buying here before too long, but all they may do is halt the selling and let it rest before it moves on lower. That gives them an opportunity to move, or protect themselves. So be careful. This doesn't have to be the end, all right? Watch that closely. On the economic calendar today, there's really not much going on. We have the ISM, non-net manufacturing, and it has been cooling off just a little bit, but staying very, very, positive, with those prints in the 50s. Today they're expecting a little bit of an increase, up around 56, so kind of keep an eye on that. And then we just have some bond and bill announcements, and this TD Ameritrade IMX, which is nothing that anybody really pays attention to. So keep that in mind. And we have a rather light week here. Notice our economic calendar. We have a relatively light week in the market. So on the economic calendar, that is. So there may not be much for news to move us back up all that much. Now, what could help us is the earnings. We have a lot of earnings coming in this week. Today, under 70 companies reporting, but then Tuesday 150, Wednesday almost 200, Thursday over 200. Before we calm back down on a Friday. So there's a lot of earnings coming in. That means a lot of data that can keep our volatility pretty high. All right. So watch that closely. Okay. Well, folks, I hope you protected yourself and that you were safe. You've taken some of those profits. Try to stand aside. Wait. Let this calm down. Let these volatile moves shake out before you jump into that trade. Be really, really careful. And with that, everyone, I want to say thank you for watching these videos. I really do appreciate it. And if this is the first time you've seen them, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. And if you could, click those thumbs up buttons if you feel it's worthy, and feel free to share this with any friends and family that you might think could find this useful. Everyone take care. Have a great day. I wish you profits. I'll talk to you all very, very soon, bright and early Tuesday morning.